Hello. Mic test. Hello, guys, and welcome to the 100th edition of the Trading Opportunities webinar. Currently, I'm just testing the microphone. If you are live, you can just let me know in the live chat. So, let me check the microphone at my end. Okay, looks to be working. So, guys, let's officially start this 100th edition of the Trading Opportunities webinar. And before we get into introduction and the actual stuff, here's the disclaimer on screen. Basically, all content presented here is only for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purpose, then you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the stuff you can just read by pausing the video. With that out of the way, now let's get started officially with our webinar. So let's get done with the quick introduction. So guys, my name is Neerav. I'm the admin and owner of 50 Years Market Analysis YouTube channel as well as 50years.com website. And what we are talking about here is in the series of our weekly webinar series called Trading Opportunities. So far, we have conducted 99 of these webinars. And one second, let me start the drawing software here. All right, so it's starting up now. So as I was saying, so far we have conducted 99 of these webinars, and we conduct one every what do you call Friday, right? Same time. So kind of a milestone here, number 100. Let's see a little bit what we have achieved so far. In the last 99 webinars, we have captured a total of 217 trades. All were discussed live in front of you guys. Trades, or let's say call opportunities, because after all, we call these webinars trading opportunities, right? And those of you joining in for the first time, we conduct these webinars every Friday at 2 p.m. GMT or 7:30 p.m. IST. So you can join in by converting it to whichever time zone you are in, right? So if you have been here and been a part of our few of the last webinars, or who knows if somebody is following all the webinars, then let me know what has been your experience so far, because that is a big milestone. I didn't think I was gonna take this series this far. It was just started like without much thought, actually, right? So that's about that. Hemang, I think I should just check the chat at this point. So Martin Watanabe is saying something. I'm not sure what that actually means. Hi there, and hello, Hemang. Hemang says it's indeed a good achievement. That's nice to hear finally from someone who is a regular viewer. Yes, so continuing on with the introduction, guys, this is what we have achieved so far, right? And since it's an introduction, I also will just go around and show the other stuff. This is the website 50is.com. I'm the admin owner of it, and if you want to learn the way I trade the markets, analyze, etc., then you can just get to this URL 50is.com and check my video course 50is.com, and Elliott Wave course is the middle link. If you are interested in reading the book Intermediate to Advanced Concepts Not for Beginners, then you can just check my book Think with the Markets. It's available on Amazon's Kindle, so an electronic copy will be provided to you instantly, right? That's there. And before we started these trading opportunities webinar, I had been conducting monthly webinar series and also uploading regular videos. So since 2016, I've been doing this, and you can see I have kept a track record with an accuracy 83.34 in 2016, 2017, 87.5, 2018, 84.61. so on and so forth. You get the idea. 2020 88.52 and 2021 82.22, so 80% plus for 6 consecutive years. After that, we started doing these weekly webinar series for which we keep a record of the number of trades which were on a webinar to webinar basis, and not maintaining a spreadsheet will be too much hassle. Right? Basically, this is all public record, and 6 year consecutively is much above all industry standards. So basically, that's what I show before moving into the webinar, so you get an idea of who you are listening to. Right. With that being said, let's see. Lastly, you can, if you want, we have a private Slack group currently, and if you are clear on the basics of Elliott Wave and want to see live plays to enhance your learning on Elliott Wave, then you can request details for access by visiting 50as.com/contact us and selecting the subject matter as requesting details for Slack private group. So that's about it for the introduction. And yeah, last thing, guys, if you want to hear from me on a week to week basis and get updates on any new stuff which I release or just internal updates which are not publicly released, then just subscribe to the emailing list by visiting 50as.com/subscribe emailing list. URL is on the top here. Right. And that was it for the introduction, guys. And good morning to you, Luis, as well. So, with that being said, let's now head over to the actual webinar. And yeah, I should have mentioned this before we go in this process. Let me just open the last 99th webinar. First, we'll discuss the chart of Euro USD, followed by crude oil, gold, S&P's 500, Nifty 50, and in the end, we will discuss BTC or Bitcoin. So that's the process we will follow. If you are live and watching this content live streamed on YouTube or LinkedIn, then you can also put it put your thoughts or comments in the live chat section, of course, right? And lastly, if you want to connect with me on LinkedIn, here's the link. Follow on LinkedIn on my website, the IN logo. Right. With that being said, I think that's just way too much for introduction. Now let's get ahead with our actual content. So this is the chart of Euro USD, which actually is not working out in my favor. I'm currently owning a long with stop loss at the low here. Right. So, but we'll see all about that. What's the trade? Why I took it, etc., etc. Right after we discuss what we discussed in the last webinar. So that's the theme we do. We check our last webinar, which is 99th. We will see what I said in the last webinar, and then afterwards we will see what happened or did not happen, and what do you call follow up with it, right? So first of all, this is the chart of Euro USD discussed during our last webinar. This is the recording. Currently, I'm just playing it on YouTube, and let's see where I'm actually discussing the main idea. So main idea is the same. The main idea last discussion was that we are in an ending diagonal, and in the ending diagonal, I have paused the video, by the way. So 1, 2, 3, 4, 5, and the idea was that once the market goes above this trend line, then we will look for long trades. That is actually what I executed, and I have counted this as a setup that worked out because that's what looked before we started the webinar, right? But it does not look like it may play out. So let's just check on the actual chart. Text, 1 second. Let me just fix a few things. Yes. So now let's check what happened on the actual chart itself. So this is a Euro USD chart, and when the market broke through this high over here, right? And that's why I was long, but this definitely does not look like something that will work out, right? So, long story short is I will have to redo the count. Let's see what's probably happening here. Maybe it's still an ED with the 3 here, the 4 here, because the 4 is overlapping the 1. In that case, I should adjust my stops a little bit. So what I'll do is I'll let this play out by adjusting my stops at least a little bit lower, let's say over here to 1.07635. So give me a moment, guys. So I'll adjust my position. Yeah. So what I've done is our past analysis was suggesting that this is the 1, this is the 2, this is the 3, 4, and 5. Now the idea was that once the fifth is complete, the market should shoot up, but given the fact that it's not working out, the idea is either this whole thing is incorrect or this was the 3, this was the 4, and we are heading in the fifth. So basically it should go a little bit lower and then fly up. Right, so my longs on Euro USD are still there. I have just adjusted the stop loss to a little bit lower so that it has some space to play out. Right, that being said, that's also the whole of analysis, right? If you are not long, by the way, then it's better to stay out of this market for now. And the setup basically remains the same. We place an alert on this yellow trend line, and once this trend line is breached by the price to the upside, that is the price is greater than the marking or the price line or yellow trend line, then we'll look for longs, right? So those who are not long, there is no setup right now, or clear setup, I should say. There's always some setup one way or another, right? So with that being said, I think the main context I should also discuss just quickly for those of you who have not been following this. So we have a wave 1 here. I think the point of reference is 1 second. Yep, that's the point of reference. So from this point, just forget the left side and everything. So from this box area, this is the wave 1, and this is the flat correction we are following. A flat correction is a ABC flat correction in this context, which looks like this, roughly speaking. First leg down in 3 waves is called an A. Next leg up in 3 waves is called a B, and then the next leg down in 5 is called a C. This C wave can be a diagonal, it can be an impulse. In this case, it looks like a diagonal, right? So that's the reasoning for taking these long trades and considering the diagonal structure, etc., etc. And by the way, I have also tried to get long before this. I was stopped out before this. So this is, I think, the second or the third attempt I'm taking at longs in this counter. So far, this count has not really given us much. I mean, not this part. Of course, here we made multiple different trades, which we discussed in the webinars on those time frames. But this last part has been really not profitable at all so far. But let's see, that's how markets are. So seemingly there are some comments. Hemant is asking, for ED, is it okay if 2 is higher than 1? 2 is higher than 1? What do you mean? I don't get it. This is the 1, this is the 2. And this is taken as the 3, 4, and the overlap is between 4 and 1. So that's why we are calling it a diagonal. Right, this is a standard 2 structure, like a ABC zigzag kind of structure. Not clear on your comment there. Someone else has commented something. Techlens Global. Hello, enough. Thanks for coming every week to help new traders to understand the complex markets. Thank you for your kind comment, Techlens. And what is Martin is saying? I'm learning Elliott Wave through your webinars. Keep on. Thank you, Martin, for your nice comment. Yeah, that's how this is, Hemang. Looked so clear, but it doesn't play out. So yeah, that's about it for Euro. Nothing much to add here, other than the fact that if this market, and so this is our trend line, right? So we don't want the market to go much lower than this. Maybe a few ticks is fine, but if it goes on lower than 1.07197, basically below this low, then of course we are going to consider that something else is going on and this count is not the correct count, and something else is playing out basically. So that's about it for Euro. And there's another comment here from Hemang. I meant for wave 2 of ED. That's what I was saying, Hemang. If this is the 1, this is the 2, this is a pretty normal structure. I'm not sure what the question is. There's nothing to or out of ordinary here. So perhaps text is not the best way to ask these things. So I will not be able to clarify unless you have a very detailed input on what you're asking. So anyways, not putting too much time in this trade, let's head over and see what's happening in the other things. Well, this is the chart of crude oil. I was considering a diagonal here. Let me see. Sometimes what happens is when I draw the charts, they do not get updated I have to refresh the page, and only then we can see the update on the charts, right? So yeah, that was the last count. So before we discuss the actual chart and everything, let me just quickly see what we were discussing on crude oil in our last webinar, which was conducted on 26th of January 2024. And here we were discussing somewhere here crude oil. Let's see what the setup was. So this is the chart of crude oil, and as you can see in our last discussion, which was done on 26th January, you can also see yourselves the streaming date 7 days ago. And if I just click more, it will show you the date January 26, 2024, right? Anyways, so what we discussed was that long, basically that was the idea, main theme, expect more upside to follow. The price was around 77, and the targets were this red line around 78 point, actually 78.75 was the first target, and then 80, and then something higher was also possible. So minimum was 78.75. If I play this last webinar, yeah, there it is, as mentioned on the recording of the live stream. So 78 was 0.75 was the target. Let's just see on live chart what really transpired on this chart. And this is 26th of January. So somewhere here we did the analysis, right? And market did go to 78 points. One thing I want to check again is at the time of analysis, the price was 77.088. So the market was basically somewhere here, right? 78.75 minimum target achieved, right? Next was 80 something, not achieved. So target minimum achieved, and then the market actually reversed around that target. So +1 on our analysis of crude oil, right? So this is the discussion from the last webinar, which has played out. However, things are not really simple afterwards. For instance, I was expecting this structure to be a diagonal here. And once this diagonal was complete, then I mean, some upside movement was expected, but on this chart, something completely else is playing out, right? So here's my updated outlook. So let me just show you what I'm thinking might be happening here. So this is the first bullish outlook. Now keep in mind, given the sharp fall, there's a high chance that we may have to update this count later on. And what we think right now may not be the analysis which is actually playing out in live market, right? So that's one thing you need to keep that in mind. Now, as I said, we want to discuss what's really happening here. I think it is forming a complex kind of correction. Now, if I remove all the counts here, possible W here, possible X, and then will be followed by a possible Y. That's our primary expectation. Now, what is this W and X and Y? What nonsense am I typing here? So those of you not familiar with Elliott Wave, this is what we call a complex kind of a correction. Now, instead of going in too much detail, what it should look like theoretically is like this. Right. So that is the general outlook or the general structure a complex will look like. This leg, let me see if I can change it. One second. So this leg is called a W. So over here, first leg up. And then this whole correction is called an X, which is what we are expecting is progressing here. Now this X is expected to stay somewhere above this wave A low, right? Can test it as well, but generally we expect it to stay above the wave A low. And then we expect that once the X is complete, the market will start moving up again and take out the high of wave W. And if the X structure has already done that, then take out the last high. So since the X structure's high is already taken out, we expect this high to be taken out, right? So that's the basic reasoning right now. And within this X structure, we are currently looking at a possible flat structure. Now, flat, as you guys already know, will have A wave down, B wave up, as I just discussed in the EURUSD chart, and then 5 waves again. So this is what we call the impulse of this, or the C wave. Possibly this is the 4, possibly this is the 5th here, right? So that's the expected count or structure. And once this 5th is complete, then we expect that this market will then start to give us this Y wave to the upside, right? So that's the main theme we are having right now on this chart. One second, let me just get rid of this bottom stuff. Yeah. So as I was saying, this is the main theme we are having on this chart right now. And currently, let me just label this for the sake of clarity. We are expecting this to have one more down leg remaining, right? Now, since this is extremely impulsive, that is, the down move is much faster than what we generally like to see. I believe that it will be reasonable to have a point here or a price level where we will be considering this as a very low probability scenario. So in this case, it's quite clearly if the market goes below 70.64, or let me see what it really is, 62624. So in this case, if the market goes below this level, 70.624, then we are not going to consider this view any longer, right? We'll wait out of the market. And I mean, I currently don't have any position on crude oil anyways. So basically, the long story short is, at this point, if it goes below 70.624, we will not be trading it. We will be waiting and watching and seeing what is really happening here, right? However, at the same point, if the market gives a reversal, that is, it just gives one leg down, does not cross 70.624, and then goes up, then I'll be interested in longs around 76.2. Now, keep in mind, interested in longs doesn't mean that I'll be taking longs. That just means that I have an alert here, and it will get fired. I'll look at the chart, and if I feel like it's going well, I'll probably buy it, probably not. Now, on the other hand, what is the bearish outlook? The bearish outlook basically is that this was a correction from this point of reference. Now, I'm talking about the outlook where this market is just completely going to go down. So in that outlook, we are looking at a correction, 3 waves up. We can count it as a WXY already complete. And then this is the start of a bigger impulse down, which will take out the last low, which is this level, 67.879. So it will take out that low as well. Now, do I have a confirmation if that's the count which is working out? No, I don't, right? And that's why I'm outside the market right now, and I don't have any position on it. So long story short, crude oil, just wait and watch. Don't take any longs. And if you have been following these webinars, you guys would already know that we were holding longs in this whole sideways range, and we booked near here somewhere once it broke the top. So large amount of longs were accumulated, and then once it went up, profit booking is was expected anyways. So, but anyways, the point is, we already have made substantial amounts of money on crude oil. We don't really have to push too much energy in it. So just wait outside on this one. Now, gold is very interesting. I'll just switch to gold. Unless some of you guys have any doubts or questions on this one, you can just put them in the comment section. Otherwise, we are now going to discuss gold from here on. So gold, first of all, I'll just show you what we discussed in the last webinar. Here's the recording from the last webinar, and gold was discussed somewhere here. Yeah, there is the chart of gold. Yes, so my bias was bearish. I did have a minor short position on gold when we were discussing this market last time. And as you can see in the recording, this was the main trend line. Somebody even asked about it as well. And I was not liking that this market was rejecting this trend line multiple times or just crossing above it way too many times, right? So the idea was if it goes above 2036, which was the marked level, then I'll get out in loss and wait and strategize what's going on. So this is what really happened. The market did go above this 2036 level, and I was stopped out of the short trades. And now let's see what's really happening. Now, and if you guys recall in the recording, you can just check it by the way by going to 50 Eyes Market Analysis YouTube channel. This is the 99th recording we are talking about. So if you check in the recording by playing the whole segment, you will notice that I very clearly mentioned that I will not go long if 2036 is broken out. I may look for it, but I was not really convinced that if this stop loss is taken, then this is a fly high kind of market. And the reason it will become clear now. Now, this is the updated count which I am holding for this counter. Actually, it's kind of a complex one. So this is the Y. So this is the main theme which I am still following here is that from this point of reference, which is the price level around 2144, we have a wave one, and this is it's better if I draw it. This is the kind of expectation I have, right? That this is forming a complex here. W up, X down, and Y up, right? And then it will complete the two here. And then it will head down for the three. It's a very far-fetched story. And keep in mind on the swing chart, like on the higher time frame chart, daily and weekly, overall gold is a long setup, right? And we have been trading it long since a very long time. If you have been following any of these past few webinars, you will know very well that we have been able to capture almost all the major moves within this leg up, right? As well as the pullbacks, etc., etc. I'm not kidding. You can just check the gold analysis in these webinars have worked out flawlessly. I wouldn't say flawlessly, but exceptionally well, right? So just reminding you that I'm still holding a short bias on a shorter time frame, thinking that this may be something like this, and then a fall. And then the new leg or the uptrend will begin, right? Like this. I may be wrong. So, but then again, I'm on the sidelines. I think on this, no, I gold. I think I have a minor position. Let me just quickly check if it's still on. Nope. Nope. We don't have any position on gold right now. So I'm on the sideline here. I'm not convinced enough that this is worthy of my time to go long on it. Neither is it clear enough to go short on it. But if you ask me for the counts, that's what I think of it. Right. So long story short, I will look for longs. Not right now, maybe near the top if it crosses 2136 something. I don't even have an alert there because I don't think that's a very likely scenario right now. And short side, I will be definitely interested if it goes below what is this 2002. Not immediately at 2002 because one more up leg may be possible. This one, right? But somewhere here, I will like to get notified, and somewhere around 1988, I will like to look for actual short trades or short entries. So gold, I'm much more interested in taking short-term trades on this smaller time frame, keeping in mind that the bigger picture is still bullish, and as soon as this thing is complete, the market will then go up. Right. So that's about it for gold. I don't think there is much to add on this one, unless you guys have any questions or queries. We will now move over to our next chart. Right. So next discussion of S&P's 500, which actually did work out exceptionally well, actually, So let's just very quickly check what we were saying on the chart of S&P's 500 in the last webinar, which was the 99th webinar. So here is the chart, 99th webinar, S&P's 500, right? We were discussing it somewhere here around 30. So this was very clearly a long, the idea was the market goes above 4908, as you can see here in the paused screen of the last webinar. Then I'll look for long. And the setup was that this was following an impulse. I'm now drawing on top of the recording. This was the 3 completed already, and the idea was that either the 4 is completing, continuing or completed already. So basically, whenever the 4 is complete, a new high will be made. That is, the market will go higher than the third wave. So that's why the setup was that if the market goes above 4908, we will look for longs. Again, keep in mind you can check the whole recording. It's all available publicly. I'm not doing anything private here. You can just go to 50 Eyes Market Analysis YouTube channel, click on the 99th recording or webinar in the live section because it was conducted live, and then check it here. And keep in mind, I also do post the timestamps as in the comments as well as it's also on the timeline. So you can just check it here by clicking on S&P, the whole thing. So that was the idea. Above 4908, we will look for longs. And let me see if I had any targets discussed very quickly here. And yeah, guys, while we are discussing what happened in S&P and what will probably happen, I would like to take a moment here and request you guys that we have been doing these webinars for a very long time now. This is the 100th webinar, and I come here every week. And I think some of you guys have done some efforts here because I can see that some webinars did see almost 1,000 views here. But other than that, it has been pretty unmotivational. 500 views, 500 views, almost 500, not even 400. So this is not the kind of response. If you are coming in here and if you are liking the content, why are you not sharing it? Because if even 15 people I can see in the live chat right now, if all 15 of you share it with 5 of your contacts, that's still a very huge audience. And I mean, I can't see a reason why it's not growing. So here's a request. If you are liking the content, do make sure you share it, right? It doesn't cost you anything. Make sure you share it on your social medias. If you have LinkedIn, if you have Twitter, Facebook, and if you have a group of traders on WhatsApp or Discord or Telegram or whatever you guys are using, make sure and make it a point that you share it and it reach more and more people, right? The idea was that if I continue it, more people will come in, and I'm not seeing a regularity here at all, right? So here's the request: take it seriously, right? 100 is a big number, so you know what happens if things don't work out. I have I have my trading business, right? This is just a side gig I do. So if it doesn't work out, I can just move on, reduce the frequency. So if you are liking it, that's your duty to ensure it continues on, right? So that's about my jibber jabber. Let's head back to our chart of S&P, and let me just show you what we were discussing last time. 4908 was somewhere here. As you can see, the market did go above it, and I don't know if I discussed the target to the upside, but it did go above 20-30 points. So it worked out, right? The count worked out actually. And later on, it was updated as wave 4 as a triangle, right? And the wave 5 complete here, right? So last analysis, I would say pretty much was simple enough and it played out. Now it's the important thing is what's happening right now. Now here's the thing: if this really is the wave 1 from this point of reference, which is the price level around 4718, right? So if the market has gone up from 4718 as the point of reference, then I cannot see any reason why this is not an all-out rally, right? So basically, we have a minor resistance which will be incoming around somewhere around 4967, 68 something, right? But that's just a minor resistance. Let me just mark it. 4968. So if the market goes above 4968, then it should be a wave 3, right? And if it's a wave 3, then you already know the drill. It will be the possibly be the strongest move, and it will take out all your expectations and basically go higher. Targets include 5060, 5140, 5200. Basically, I'm just using these FIB projections. You can also take the intermediate ones, but basically the point is it will go 5000 plus plus plus, and not much point in plotting targets here because wave 3s are known to show exceptional strength, right? Now that's all well and good, right? If it goes up, it goes up. And I actually do have a long trade already placed on S&P. I think, let me see the exact position. Yeah, I have it long added today itself, around 6 hours or 7 hours before this webinar, right? So roughly speaking, around the price level 4926 something. 4926, yes, late entry, yes. So I had taken a minor long here around where is that, somewhere here, right? So the idea is that I'll continue to build this position on if it continues to go higher and higher. Instead of taking all the position at once, I'm just building it up, right? So if it goes up, it goes up. The second idea is basically that this two might be continuing. If this two is continuing, then we do not expect way too much bearishness in this counter. Maybe it can go to 4833. So expectation is that around 4833 maximum it can go and then reverse. And the main idea is that this is the one already complete. This is the two already complete. And we still are waiting for the three to show its true nature, taking it to 5,000 plus. Downside, as I just said, 4833 is what we are expecting to give a support. If our primary count of straight out bullishness it does not play out, then 4833 is the support, in which case we will say that the market is coming in as a wave to 4833. And then after that, this rally should continue. So as you can see, both our hypotheses or analysis are pointing in the upward direction. So swing perspective is long, and that's why I'm building a minor long position here right now, right? So when are we wrong? If the market sustains below 4833, like goes below it, treats this level as a resistance instead of support, then maybe something is wrong and we will need to reevaluate. But until that doesn't happen, it is exceptionally bullish at this point, including some of the tech stocks if you are following them. So that's about it for S&P. Pretty straightforward, nothing much to add here. And if you have any doubts or questions, you can just type it in the live chat section. So with that being said, what we'll do is we will move on to the next chart. What is the next chart? Nifty 50, which will be then followed by BTC or Bitcoin. Yes, among there are multiple data points that come out, but as technical analysts, we know that a strong trend does not consider negative news, and a positive news you don't even need to check. Right. So let's head over to our next chart of Nifty. I think that's the chart, or this one. This one. Now here's something which actually did work out as per our discussion in the last webinar. So let me just quickly go over what we were discussing in the last webinar. First of all, so here's the recording. Let me see what we were saying on Nifty around here somewhere. So on Nifty, let me just play this video. So this was the marked level 21640. There were two hypotheses. The idea was that it was unclear if this is continuing as an X. Like, can you see the structure on the top in the box and focus on it? Then you will realize that we were here in the structure. And the idea was that this could be going up, but as a temporary X wave, which will then be followed by a down. That was the one of the two hypotheses. The second hypothesis was that this will not play out like this, but the whole correction is complete here, and the market will just go up from here. That is, price will just fly high from here. So we did not have any confirmation of which one will play out, right? So the only level which I had marked was 21640, which was the level where I had said in the, you can check the whole thing. It starts around 35 something, where I had said that if the market goes above 21640, then I'll be considering it as a clear long opportunity and will look for longs, right? So short term wise, we had less clarity, but swing wise, 21640 was a long trade setup, right? And as it happened, 21640 was breached. Let's just check that on the actual chart. This is a chart of Nifty, and 21640 is here, right? And our discussion was somewhere here. So as you can see, the market breached 21640 and clearly went up and tested, almost tested. Yeah, it actually exactly tested the last high, right? So our analysis again from the last webinar has played out quite clearly, right? Now, what is the actual count here? What's the logic with this market is moving? Pretty easily, we can say that from this point of reference, which is the price level around 20,129 something, we have a possible correction incoming. Now, there are actually two, three ways I can count this. So I'm just going to give you a rough outlook, not going into too much detail. I can count this as an nested impulse from this point of reference, that is 21141. We can count this as a series of ones and twos, and so on and so forth, so on and so forth. So as I said, this is not the proper count. I'm just giving you a rough outlook, right? So this is super bullish one, and the bearish outlook is that this is a boxed range or a sideways movement, and the market can continue to remain within it until it closes above it and takes this level as support. Actually, not necessarily this level. It can take a support a little bit above or a higher level as well. But until the market sustains above this level, this can also give a false break here. So basically, what I'm saying is that swing perspective, why this whole range is a buying range. But this is pretty huge on and not very useful for short-term traders. Like this is from 22,130 to 21,130 something, almost 1,000 point range, right? So from a swing perspective, this is all accumulation area, right? It can sustain within this and then go up. And the extreme bullish count is that it has already completed the whole correction here, and it is just a series of ones and twos which will soon take out this high, and soon this market will follow upside. Now, which count is it following? I don't exactly know right now, but I think it's taking more of the clues from the foreign markets, or basically just if you are tracking DAX and S&P, you'll know where to use the correlations, when and how, right? So for now, that's the outlook on Nifty. Wait and watch a little bit. The swing bias remains bullish. Only time our swing bias will change from bullish to something else would be if the market goes below 21,200 or basically takes out this low. Only then we will consider that maybe this count is not the one which is really playing out, right? Other than that, we do not have any reason to believe that anything contrary to what we have analyzed just now from a swing perspective is happening. So wait and watch on Nifty, and I will place an alert here, although it's kind of not required because I'll be tracking it in live. But that's it for Nifty. If you guys have any questions regarding it, you can post that in the live chat, right? Otherwise, we move to the last chart of Bitcoin. There is a question from Jay. Haniel, can it be a start of downtrend in the form of WXY starting 16th January? Let's see, 16th January. Yes, it definitely can be a correction continuing, Jay, but that's something we just talked about, right? WXY is a correction, so it will remain in this box range, can give a small expansion to the upside, but then will again soon subside within the range. And then it can be counted as WXY, ABC, or just a simple flat triangle, who knows what, right? So when I said the box range, I covered the WXY without actually saying it. So yes, what you are saying is possible, and that's the first part of the discussion on Nifty, right? So that's about that on Nifty. I think we'll move over to our last chart, Bitcoin. And yes, before we move there, guys, if you are watching this webinar and you have been liking the content, then here's a small request from my end. This is our 100th webinar. So kindly do your contribution and share the content so that we can get some more views and finally cross this almost 1000 mark, which we touched around the 97th webinar. So since that, we have not clearly closed 500 even, right? So kindly do your contribution by sharing it with at least 5 of your contents or social media groups, right? And I'm pretty sure you guys sharing it will help us reach the desired audience. That's about that. And let's now head over to our last chart of BTC, which is actually working exceptionally well. So let's see what's really going on the actual chart. So here's the chart of Bitcoin, but as we always do, let's have a quick look at the recording, and is the Bitcoin discussion done at the end somewhere here. So yeah, that was a discussion we were expecting. It's an A down, B up, and C down. That was one of the two counts. Keep in mind, this was not the only count we discussed, but this was the, I'm actually not sure if this was the main theme. And if you are not aware, I'm currently not trading Bitcoin because of the high amount of brokerage charged at my end. So it's just something I'm analyzing. But this was one of the two main counts we discussed. Actually, two is, I think, all the counts, maximum number of counts we discussed. So anyway, the idea was that it's in a sideways range, just like I drew one on Nifty. Same idea was here on BTC, and expectancy was that it will go up and then continue sideways, or perhaps even cross. So if we play this webinar recording, you can see that this one outlook, and yeah, that's the second outlook. So swing perspective, why we were thinking that either it will just remain sideways or just go up from here. Price at the time of discussing this market was 4,000, 41,000. Let's just check the actual chart. So this is the actual chart here. So our discussion was on 26th January, somewhere around here, right? And as you can recall, the idea was, let me remove all of this, that this is an ABC, and either we'll see straight up from here or we will see a sideways expansion. I think there was a counter view. So I'm not saying this was the only discussion. So you need to check the whole thing. I'm just discussing the one which actually played out. So yeah, that was it for BTC. We were expecting it will go up. It went up. Now it's the thing is, what's really happening here? What's the count here? That's an interesting question. Do you regularly get alerts from TradingView when you are sleeping? Well, sometimes I do get alerts from TradingView when I'm sleeping, but then again, I'm sleeping, so I can't check them. Right. So yeah, I do get some alerts in the morning. That's the first thing I check actually. If I have two, three alerts, then well, actually it is brings up one point that if I get one or two alerts, just casual stuff. But if suddenly I'm getting three, four alerts, like 10-year yields crosses a low, S&P crosses an high, euro goes here, gold goes there, then I suddenly get a picture that some big money has moved. So the number of alert also equals to the market activity becoming clear. I don't even have to check the chart in those cases. I already know that money moved from here to there, and this position would have performed. This one must have hit the stop and everything. So this is only applicable if you are actually analyzing all the major markets like crude, gold, S&P, Euro USD, the DAX, and yields, and put in two or three more maybe. But this much is enough. If you are analyzing all of them, then putting alerts on them and even just casually analyzing them, not necessarily with the intent of trading all of them, is what do you call, give you a separate perspective, right? Because then you know where the money is going, and the correlations also help a lot. Actually, there are some trades which I catch just because of the correlation. I don't even do analysis sometimes. I just know that that thing is moving there, so this will happen here. But anyway, that's just how it is. So good question there. Jay is saying Nirav never sleeps. He's the actual tiger. I think even tigers would sleep. Funny comment, Jay. So getting back to our analysis, what is this? Yeah, so this one is actually a very clear analysis. Not sure when was the last time I saw clarity in Bitcoin at this extent. This is like a picture perfect impulse, and this is a picture perfect correction A, B, C, and this is a flat, a regular kind of flat with an expanded kind of wave C. So not your typical book example. This will be your A of the flat, B of the flat, and C of the flat. Now what's happening from here is if this is the A or one, this is the B or two, then this can just fly high from here. Second possibility is that the market wants to move more within the sideways range, the same idea which we have discussed in the last 2 3 charts, and then it flies high from here. So in all possibilities, we are expecting that Bitcoin at least has one leg up remaining, right? Only time things are not going as expected is if we start to see market go below this low of wave B or 2. The price is what? 41817. So if the market goes and sustains below 41817, then we definitely have a possible problem here, right? Then maybe something else is happening, right? Although I personally feel that a little bit of move should not be considered. Sustenance means that the market spends a lot of time below it, starts to take this as support, maybe even, right? So that's an issue. Minor spike will not be an issue, but overall, this remains bullish. Actually, you can see the other bias is that it will give a minor leg down before flying high, right? So keep that in mind. But as I said, swing perspective, we are thinking that this market is most likely heading for at least one leg up. Now, where will that leg stop? What's the idea behind that one leg up? Well, we can do some quick analysis, but the problem is the wave B low is not yet defined. So we cannot say with absolute certainty where the target will be. But as far as theory goes, you can just measure this wave A up, project it from the end of wave B, and get the 61.8 or something like that. Basically, it will give you a target around 45,000 something something, right? Actually, 61.8 will be higher, but I'm just considering the fact that if the wave B or 2 complete continues down, then you will get around 45,000 something. So yeah, and if you are conservative, just don't do anything. Push an alert like this near the tops. Once the top is taken out, then look to consider long trades. The alert currently is around 43,614. Right. That's the whole theme on Bitcoin. Simple enough, and it's actually following the count. So definitely keep this one in your watch list. Things that are clear, never leave them. Just keep that in mind. Things don't always get so clear. If you look at this was a mess when it was actually happening. Yeah, of course, after it happened, I can count it very clearly. And most times I do count it clearly, even when it's not complete. But in this case, it was not clear when it was moving. So now that it is, don't miss the opportunity. Right. Check MLN's chart. What is MLN? I don't know. Not here though. If you're free time, not here though. In your free time. No, I don't know what that is, and why will I check it? I don't even trade Bitcoin. I think probably that's a cryptocurrency. Right. There is another request here. A small request. Can you give us a small 5 minutes at the end of your session to ask you questions on general view of trading? Well, Jay, I am here. If you want to ask questions, you can ask right now. I don't want this webinar to go more than an hour, so you have like 3 4 minutes. Right now, you can ask if you have any questions. And Hemang, what are you typing? Can you be more clear? Don't type short forms here. Maybe I'm not following all the things, right? I'm following a lot of charts. This is just one of the tabs, but not everything I'm following. So you have to be more clear what you are saying. Right. So, guys, yeah, this is our 100th webinar. Thank you for joining in. If you are deciding to leave, it was nice to have you till the end. Yeah, it is crypto. Yeah, so Hemang, as I said, I don't really trade much, and I have even stopped. I mean, I don't trade much of crypto, and I've even stopped doing Bitcoin for the current time being. So that's that, right? And yeah, as I was saying, guys, thank you for joining in our 100th edition, right? And if you are leaving, please make sure that once you have left, you have shared the links for this webinar. In case you do not know, this webinar is available here on YouTube. You go to the 50 Eyes Market Analysis YouTube channel, click on live section. right? And then you can check the link for the 100th webinar here. And also after the webinar is complete, like within 30-40 minutes or something, you will also see the link here on the website 50s.com at the very bottom. And lastly, of course, I have my own Twitter handle, my own Facebook page, and LinkedIn. So the links will be shared on all these three things, right? So in that case, if you want to just copy the links from these social media, you can just do that. And if you want to follow, you can also follow, right? So that's about that. And thank you for joining in, guys. And I hope to see you in the next one. I mean, yeah, you're very welcome, Jay. So with that, let's now end this discussion. I don't think there's any more comment. I'll just recheck before I close the session. Okay, guys, take care and bye.